Welcome back. The RBA kicks off its two-day meeting today and the pressure's on ahead of tomorrow's call.
A former RBA board member says the bank should hold the interest rate steady, but the markets are still betting on a reduction. From where we are joined now by Nine's Money editor, Effie Zahos. Effie, good morning to you. Would the bank have any cause to keep the cash rate on hold?
It's amazing what a week does when it comes to sentiment.
Yeah.
So, look, there's enough uncertainty out there and there's enough support in the data for the RBA to come out tomorrow and say, hey, we're pausing. And as you pointed out, we had a previous RBA member, Warwick McKibben, who's gone on record to say the RBA should pause. Couple of things. We know that the underlying inflation, what the RBA looks at, is in the band, but it's only just. And we had those job numbers really tight. It was enough to spook the market. So at one stage we were looking at up to 5 rate cuts, 6 rate cuts. Now it's gone down to 3. Look, not that I can have a, guess it completely, but I would say that, all bets are probably on rate cut tomorrow, but how hard or fast the next continue is anybody's guess.
So why is there all this speculation about a pause then? I mean, I don't understand when 96%...
Some of them are saying pause, but it's more the uncertainty around tariffs. That's eased a little bit because it seems to be, have they agreed or not? But there's still that. The job market is very tight. It's still, quite robust there. So I guess that is the uncertainty. We don't have a lot of ammunition as well. So, we can't keep cutting. There's not much there. So why not pause, hold, see what happens?
What do you mean we can't keep cutting? We can keep cutting
we
and
can
cutting
go
and
right
cutting.
down.
What's wrong with that?
Right down. Look, that's what some are saying, but the consensus is, as you saw, that we would see a rate cut. But as far as having all these rate cuts one after another, I think it'd be pretty restrictive.
All right, the impact on the property market?
Well, we know that if you cut rates and supply's not there, what's going to happen to property market? So the auction clearance rates are over the weekend, just under that 70%, although Melbourne was over 70% because Melbourne saw a drop in prices. People are trying to pile in. Interesting, I approached the big 4 banks on how many pre-approvals are out there. Some of them want to withhold that data. Some said ANZ a big uptick, so more people are waiting and ready. Cautality have said next week they're going to see about a 30% jump in the number of properties going on the market because vendors want to sell. They know that with a rate cut, people have more money to borrow. So that's possibly what you could look like after 3 rate cuts, about, almost 100,000 more in borrowing power. All
right, and keep your eye on fixed rates too. They're dropping pretty fast.
OK, a word of warning here. They're cutting fixed rates because they're thinking rates are going to fall, but they also want to lock you in. Check this out. The cheapest in the market is actually not bad. You might think this is basically showing that not all banks cut rates, and it's interesting, not all banks cut the deposits. If we can go to the fixed rates here, and I'll just show you. 5.29, the cheapest fixed rate there from Macquarie Bank there. Now, the other one is Bank of Queensland. If you cut in for 1 year, we only need 3 rate cuts. You'll find that your fixed rate 1 year is actually a little bit more expensive. But why would you do it? You get an automatic 3 rate cut straight away by locking in. The important thing is just check the variable rates are cheap too.
Good advice. There's some good deals out there.
There's a lot there.
Sharpie, isn't it?
And you got through it beautifully.
Magnificent.
Yeah,
magnificent.
It really was.
Well, straight ahead.